the SP 500 and the Nasdaq 100. That's what we're going to be covering today specifically. We're going to talk about the levels we talked about in yesterday's video and go over what's happening on the day. Now, before we get into anything else, I have to ask you to do two things: like and subscribe. What did I say yesterday? Bull trap tomorrow. Don't miss this. And we're going to go over to exactly what I was expecting. Now, every single day when you come to this channel, you're going to get exactly what you expect, an unbiased perspective on the market, what I'm trading and what I'm looking at every single day. You can also follow on Twitter if you want to get daily updates throughout the day. Also, we do different giveaways. Someone just got a monitor. Actually, two of those are waiting for another picture from the other guy. But you're going to see chart setups also if you don't want to take the next step and subscribe to Discord. If you want Discord, the link is down below, so you get all of that included. But all day long, we have the free, and then obviously we have the paid. So whatever you're interested, the links are down below. Let's get back to the video. So what we're going to talk about here specifically is the Nasdaq. Now, today we had a little bit of information. I'm looking at the 2-hour chart so we can cover a few things. Now, I mentioned yesterday's video, before I go too much into the price action, that we were clearly here in this downtrend, right? We're clearly just coming into the downtrend. We had a little bit of a breakup, yes. Then we broke through that smaller demand or supply level here on like the 1 hour, the 30-minute chart, and then we pushed up to the 2-hour. Now, I'm going to tell you a few things here. I don't like going to shorter time frames and looking at supply and demand levels, let's say the 15-minute, 30-minute, 1 hour, because you're going to get less reliant on those, right? They're going to have less conviction, if you will. So I like to, the shortest I like to go is usually the 2-hour. That's why I don't spend too much time, but I was just trying to give you guys a feel and an overall price target level of what to expect here. And you can see, if we look here at these, key levels here, let's just look really quick, go down to the 15 minutes. You can see how we traded here. You can see this level here. We basically operated in this level overnight. We broke above at roughly, we came into this, came back below, and then at roughly around, midnight Central, 1 a.m. Central, you held here until market open right here, or actually market open right here, and then you dropped around 9 o'clock on the dot. What happened there? PMI, which we talked about yesterday. We're going to go into that. But you can still see you respected this level, but ultimately you respected the major supply on the 2-hour time frame as we come back. And we did mention from yesterday's video, trapping all the bulls and pushing you back down. Now, what happened from there? Now, specifically, what we looked at was your PMI information. So if you want to look, investing.com has all this information for free. I'm not sponsored by them. It's just a really easy way to check the calendar and seeing that. And I also post most of this on Twitter as well. You can see your expectations. It was a 46.2. You came out on the dot there. But this wasn't necessarily the bearish part. The bearish part was this. It was the actual PMI report. And I'll have this link down below, probably the first comment, so you can check it out. This was the report going on. I'm not going to read it all to you, but I want to talk about a few things. One, your top one. Your top paragraph, manufacturing firms in the U.S. indicated a solid decline in the health of this sector during December, right? The health sector took a big turn. We saw some news about this last week also. Now, also going a little bit further, and I might be reading that wrong, just to let you know, but I do want to talk about, I have more news to follow this up. I'll go over that in a second. And then the last paragraph, basically a synopsis of everything that happened. The last three, basically, lower input prices for some items were in part driven by reduced demand for materials. So even though you're still having a commodity issue, they're actually lowering prices just because the demand is so low now. Purchasing activity dropped markedly and at the fastest pace since May 2020. So maybe we're getting the answer to why everyone expects quarter number 4 to do worse than quarter number 3. Maybe there is a demand issue out there after all. Remember when Apple reported their earnings last time and they said, we don't have a demand issue, we have a supply issue. Well, guess what Apple announced today? Do a quick Google search. Apple, and then just look at AirPods and MacBook. Guess what happened today? Right? Very simple with their news. Apple tells their suppliers to build fewer AirPod, Apple Watch, and MacBook components. When last year, if you remember, this was their top selling product. Apple took a major hit today. Why? And these are all things we've been discussing here on the channel for weeks. There is a demand issue, people. They should not be lowering supply. They should not, by no means should they be lowering supply if you're a healthy business, specifically during holiday season, right? right? Because they're having a major excess of inventory now. So that's what we're seeing there. Such a fall also led to the broadly unchanged lead times for inputs, as supplier capacity constraints were less apparent from the earlier year. Weak demand conditions contributed to the firms opting to work through excess stock, like we saw with Nike. They're trying to liquidate everything, but they can't, built early in their year. The pre-production inventories fell sharply, and stocks of finished goods broadly unchanged on the market. So basically, people have all this inventory and they can't get rid of it. And now we're seeing tech companies have it, like Apple, one of the best sellers, supposedly with the best overall supply chain. They have the best demand. But guess what? They lie to you. They lie to everyone. Now, backlogs of work contracted a steep pace in December amid lower new order inflows. Consequently, firms recorded only a slight increase in employment, which employment is still rising. That's food for thought. The rate of job creation was the second slowest in the 29-month sequence of growth, as some firms filled long-held vacancies for skilled workers. Finally, output expectations picked up to a 3-month high, but remained historically subdued. Firms expressed concerns regarding the impact of inflation and weak demand on future input or output. Now, I could understand that was a lot. Bear with me, stick with me, because we're going somewhere. We are seeing demand basically getting crushed, okay? When hypothetically it should be at its best right now, just saying your range, we're seeing it get crushed. On top of that, we haven't even started getting hit by unemployment. When that happens, demand will get even further. It'll be disastrous if this happens in tangent. And this is what the Fed was concerned about. And this is the pain cycle that we're probably in right now. So now let's get into where we're at. So we have that PMI report come out right here and obviously tanks us down. And we get some buyers to show up. Decent buyers show up a little bit here. Let's go to Yahoo Finance really quick just to show you what's happening. I like to use all these examples so you can do this for yourself. You don't have to rely on anyone, me, or anyone else. I recommend using Yahoo Finance. It's a very simple way to look at the overall volume on the day for SPY specifically. Now, you need to account for after hours, so I will say you're probably going to get around 6 to 8 million in volume on top of this. So you're going to push towards 75, 77 million, which is right about the 30-day average on volume. So it wasn't a terrible volume day. It was okay. It was decent. And you had a lot of that volume in the morning. Okay. I want to say right now, if you go look back at the volume, go look at the charts for yourself. Volume stagnated and declined on this upside push here. Okay, a lot of that volume was established this morning to the buying and then the immediate selling. That's when most, around 45 to 50 million of volume was in this time frame here, going to lunch. Very slow, big slowdown there. What does that tell me? What do we always say here? When you're looking for continuation, when you're looking for a pivot, what is the number one indicator? Is it the MACD? No, that's a trash indicator. RSI, trash indicator. The 1348 crossover, I'm going to tell you right now, I think those are trash too, right? Right now, the best indicator is volume, because volume doesn't lie to you, okay? Volume, and if it does, it's very rare that it lies to you. Volume tells you the direction, and it tells you who is strong and who is weak. With the bounce that we got here, we still rejected below the 11,000 NQ level, and we're bear flagging back to the downside. Now tomorrow we do have some important information. I don't want to skip over that. We have some stuff coming out tomorrow. You will have PMI coming out at 10 a.m. Eastern, so 9 o'clock Central for me, 30 minutes into the market open, and then you have your Fed minutes coming in at 2 p.m. Eastern, 1 p.m. for me, and then you have your job openings also at 10 a.m. Those are your big things. I think job openings will be big. I think we need to be paying attention to job openings. And I do believe PMI is going to be important just based on how we move today from our ISM manufacturing also. Those are very important things we need to be looking at. I do believe we're shaped up for more downside. I'm not going to lie to you. Why? Because volume came into the downside heavily. That's where sellers actually showed up. Buyers did not show up and push you through highs. You rejected at supply once again. Your only real 2-hour supply, which we could argue is your biggest one, right? And if you want to go to your next one, it's your 4-hour supply at locally at 11.35. Okay, next up. So that's tech, that's Nasdaq. Now I'm going to tell you right now, I hate Qs. I think Qs have a lot of downside. Big bear there. They will hit new 52-week lows first. I'm going to tell you that now. Next up, ES. ES, you were making higher lows. But guess what? That's changing. You broke below. You invalidated that. You're trying to hold, but you still look weak in my opinion. If this was buyers and they were strong, I believe you would have pushed you back up locally above the 38.50, 38.60 range. I will say 38.40 is still a nice range, but I still believe there's weakness here unless data comes out very strong tomorrow. Now, a deeper look here into what we're looking at. ES has still not touched our bottom demand. Okay, if you've been here for the past week, this is all we've been paying attention to. Bottom demand on the 4-hour time frame. You have not tested it, right? If we look in here, you get some fake breakouts, a fake breakout to the upside on overall pennant, and you're pushing back down. In my opinion, if sellers step in here, we will see blood and we'll test this in a hurry. Now, the big news on the day was that Apple stuff. What happened from Apple? And again, if you're not following on Twitter, I'm going to tell you right now, I recommend following on Twitter. 6 hours ago, okay, I'm going to show where I posted this at 8:53 a.m., about 20 minutes in the market. Timber, this could get nasty, right when that was reported. What happened from 8:53? Let's get a quick little zoom in here on Apple. We come into about the 15-minute chart. Let's look so you can tell. Right here, 8:45 into 9, you start dropping. Let's say benefit of the doubt. You know, I'm late here. It's at 9 o'clock. You still drop from 127 all the way down to 124, and you flip your previous 52-week lows. Now, the importance of Apple is because it's the biggest holding in the S&P. That's what you need to know. And I have been saying for some time, I don't think you see blood really show up on the S&P until Apple breaks out of this weekly pennant. This is a weekly time frame, 2020 through 2022. You've broken, you push below, and you're breaking down again. What did we also say here on Twitter? Again, this is why I recommend Twitter, because it's free. I love to give you guys as much free information as possible. Right here going in, I told you about NQ, NVIDIA, a little bit further. This is the NQ chart. We have tons here. Apple, what was happening here? You started flipping over, right? You need to understand what's happening here. All free information, all free. This was all put here. So again, Apple, I do believe you have downside. The next major level will be 116. You have a few levels here at 122, but 116 is the big level to be watching in my opinion. Okay. Going further into tomorrow, my opinion, you're still obviously extremely bullish or bearish, on NQ. I expect more downside. Going into VIX, looking at what's happening with DXY and yields. DXY, we mentioned what happened here. I said there might be some blood here, and I was actually a little bit wrong here. I expected DXY to maybe get a drop down into our zone 101.9-ish, but you bounced again out of this key level that we had. Okay, worth mentioning. They're not letting you go out, and you look like you're kind of trying to flag back to the upside. Going into yields, we mentioned yesterday that you were starting to break towards the downside on yields on the inversion chart. What's happening here? You break down a little bit, but guess what? They're trying to push you back up. These are coming back up. What did we say? What were we expecting here on the 10-year? We expected that 10-year yield to start pushing back towards 4%. Now, you're not there yet, but again, you're getting the love. 3.4% all the way back up to around locally 3.9. We're still working our way back up. We want to start seeing that start taking place. We want to start seeing the 10-year outpace the 30-year so the inversion can get back over, and that's when we had the most bearish movement on the market, in my opinion. Further, TLT, what's happening here? This is probably one of the biggest question marks for me on the day. And again, I'm unbiased, so I try to give you whether I like it, whether I hate it, whatever's going on. You came back, you tested that trend line that we've had. If again, there's a 2-year long trend line towards the downside, so you can see here on TLT, basically, or actually a 1 year since last December, since the bear market started, right? Now, if we look here, what's happened? This morning, you started to see a little bit of buyers. I told you, this morning you did get some buying action, some good volume also. I think you had about 10, 12 million the first 30 minutes of trading, which were when you were bullish, right? And you were gapping up here on TLT. You had good behavior here. But what happened? Going into 9 o'clock, it gave it all up. It started pushing us back down. Even with the love you were getting here on the market near the end of the day, you were still pulling back down. Okay, I want to highlight that. Very transparent what's happening there. Now, I won't say this is the most bearish thing yet, but if you start to push below 100 and holding there, again, it's very bearish and tells me that there's not a lot of confidence here on our market specifically. Now, going into the last thing we're going to look here, again, is VIX. Now, we look at VIX, I want to highlight just the levels we've been talking about. Again, we talked about what was happening here. Over the past year, the past bear trend that we've had, nothing but downside, people. Nothing but downside on the market. Every time we've come into this $20 to $19 range, you've had a vicious and ferocious bounce come within the next few weeks, right? Boom, boom. Now here, this is arguably our smallest bounce that we've seen and our most lackluster bounce on VIX. I do believe we're queued for volatility. I am also have the understanding or belief that we have limited upside here personally. That's my personal opinion, what I'm looking at on the market. And what tells me this is the amount of buyers every single time this happens. For instance, when we look at something like SPY and you start to see buyers show up, and I encourage you to take a step back. Really zoom out on your charts. Don't have to go to the weekly, but let's look at the 4-hour, for instance. You start getting some bounce here, but guess what? It's really just not much, and you get rejected right back down. Anytime buyers are showing up here, you're just met with more selling volume, specifically on this attempt to bounce since the overall December 13th top, okay? So that's what I want to highlight here. You're clearly still on a bear flag here on SPY, very clear on the 4-hour. I don't know how else you can say it. It's one of the most clear charts I've seen in a while. It looks like it wants to come down in this demand, and this is where I have to expect it to come to, personally. That's what I'm looking at. Now, the only question mark, again, into tomorrow is this data. I don't believe unemployment's going to be rising by that much. That's my personal opinion. I think PMI will hurt. I think it's going to be a bad report again. Fed minutes, it's just going to be a repetition of what was said from the last Fed meeting. And they're probably going to voice some concerns that they may have on the market that may be playing out as we speak. So that's what we also have to worry about there. So that's my viewpoint on the market right now. Now, stocks I'm liking. I'm only in one stock right now, and I was actually called by my partner in Discord, Jay Ream. You know him. You love him. The guy simply doesn't miss. Now, I love this call out personally. NVIDIA has been showing nothing but weakness. As I mentioned on Twitter also, the expectation of a retest of 150. Yeah, 150 immediately dropped. Started going short as you started making this kind of... If you look here on a 4-hour chart, you can see the flag forming just on a broad viewpoint also. But in the shorter term, you're still kind of flagging here. I do expect chips to continue to get hurt. Under 142, I believe this could easily come and test 139. But really, you have to start looking for the illiquid levels here when we go to NVIDIA. And I believe you have a lot of pain potentially down to the 130 level in a hurry also. Now, a few of my runner-ups. Okay, I'm going to tell you right now. Apple, I think it's brutal. Under 125, it's one of the easiest short positions, I think. Also below the previous 52-week lows of about 125.88. It looks really good. Next up, I loved Amazon, but I was going to keep it off the list because they had some good news today. Microsoft. If Microsoft can get back below 238, I still love it. I had to get out of my position, but I still love Microsoft to the downside. Looking relative to the rest of the market, this thing is holding up like a tank. The question is can it flip this level? And I wanted to give everyone a visual of this level in particular. If you zoom out on the daily time frame, you can come back to the 2021 SR flip. You had a key level here, you flipped, mounted, pushed up. You're trying to get back below at 238 level. These are the importance of key levels, people. I don't just pull levels out of my ass and just tell you, oh, this is a great level, right? I try to always back it up so you guys can learn from this also. When you come to the channel, it's not about just me giving you information. It's about you retaining some of this information so you can apply it to your trading. Now, again, still pretty liquid. Only trade I have open right now is NVIDIA. Do love it. I do expect downside, but that's it for me personally. Runner-up also, Tesla 100s. I'm going to tell you right now, the SSR rule did take place today. It's worth mentioning. You had immediate and just really nasty downside here on Tesla. I will say that, just absolutely gross. This is where SSR got implied right around the 111 level. You continue to go down with the market, but again, short sellers couldn't attack it like they really wanted to because of what happened right here immediately. You literally opened up down 10% almost off rip. So it's worth mentioning, even with a bullish market in the beginning of the day, you still pulled back. So again, I'm still very bearish on Tesla. I'm looking for any type of upside to continue to short this thing. It's down because of the miss of expectations of deliveries, and then ultimately people expect EV to continue to get hit. Keep an eye out for this. I'll see you guys tomorrow. Have a good one.